Today the Dow finished down 2.19%, the S&P 500 finished negative 1.52%, the Nasdaq finished down negative 1.74%, the Nasdaq 100 negative 2%, and the Russell 2000 negative 1.61%. Let's get into what happened today. So when I take a look here on the daily of the Nasdaq here, we still have no institutional support. Really, there's really nothing else to kind of talk about with the Nasdaq. We do have our EMAs curling down here, and one of the issues that we're seeing here, right, is we talked about on our last video, and that's really that's why it's important to subscribe and make sure that you're watching more than 5 minutes of somebody's video. We have net sellers. So whenever I see a break of the 55 EMA institutional line, to me that tells me that we have what? Net sellers. What does that mean? So what net buyers looks like is this, right? So we have net buyers, right? We're above this institutional 55 EMA line here, right? That is what net buying looks like. Net selling looks like the opposite right here, especially when we break the 55 EMA, which again to me is an institutional line. Okay. Heading over here to QQQ, that chart's irrelevant. That chart's irrelevant here. So right here, I kind of want to point out the one of the big issues that we're having in the market here, and it's one of the reasons that traders are losing a lot overnight. They're doing very dangerous swings. So from the high of the day here, right, we had a negative 3.17% move here in basically less than 2 hours, and then after market here we have a move up of 1.59%. This is the market that we're in. And a lot of people aren't willing to accept that, right? So when you see a lot of moves like this, you have all these chances here to exit, right? You know, reverse, make decisions, right? And when you see this chart here, right, you see trap after trap after trap, okay? What is that? These are bear flags. This is what a bear flag is. They're bearish pennants, right? And there's patterns within patterns within patterns here. We also have a head and shoulders here as well. One thing that I like to point out here, why and how I try to differentiate myself between other traders here, is a lot of traders might see this as one, see this as like, you know, several candles, lots of candles, blah, 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 right? I see this as one candle here, right? And I see this as one pattern. I see a falling 3 bearish reversal here, right? So when you get a bit creative with your charting, right, you can see things a bit differently. Yes, I'm on a 30-second time frame. Yes, time frames are relevant to what you are charting here. But at the same time, right, what's going to make you different from the other trader here that has all the same information here on the web? Okay, so trap after trap after trap, right? So for me, this is like a mother bar to me, right? So we have one mother bar. Some people call it control bar. You can call it whatever you're comfortable with. And then over here, right, within the pattern, what do we have? Okay, so what do we do here, right? We rise, okay? So basically what you have here is, right, a rising 3 here, okay? When you drop a Fibonacci here from the top to the bottom here, okay, of the day where we closed, right, you have our 50% line right about here, okay? So a lot of people use their fibs different. Maybe I do, maybe I don't. I don't care. I do what works for me. You should do what works for you. And one thing that I am looking for is maybe can we get back to this 50% line, the wave view, the 50% line, right? We have bears and we have bulls, right? Again, time frame is relative, right? Using your fibs on a daily, the weekly, the 1 second, the 1 minute, right? It's all relative, right? Obviously, lower time frames have lower probabilities, but when you have really clean price action like this, they really are easy to read, right? Here we have obviously a control bar, right? This is controlling price, literally, as we speak. And one thing that I like to view the 50% line, right, is we have you and me, we both own a company, right? This is where we're at. Somebody goes up here, right? Somebody's in control, they have more ownership and they control, right? That's how I view the 50% line, right? Above it, right? Below it, right? Who's in control? Obviously, bears are in control right now, okay? I marked off my low of the day, have my midday price here, and then I also have the upper extension here to where we drop here. The chart pattern that I'm looking at here is the bearish falling 3. Are there other things within here? Of course, but this is how I see this entire sequence that occurred here. Going over here to the Nasdaq again on the weekly time frame, right? Time frames matter, they're key. I see 3 black crows pattern here. Typically, after you have 3 black crows, you will get an inside hammer, Maruzu candle here. Are we going to get it? I don't know, but overnight, looks like we are getting it. We're at 668.07. So those are things to consider here, right? Again, we have 3 black crows. What's opposite of 3 black crows? 3 white soldiers, which is here. What does that look like? Looks like this. So 3 white soldiers, 1, 2, 3 up, right? 3 black crows, 1, 2, 3 down. Okay, what does 3 white soldiers look like? This. Okay, and again, are there different patterns that are happening here? Correct, yes. What also do I see here? Falling 3s are here as well, that we called out here in stream. Here, okay. Again, they don't have to be 3 patterns here. We also have a dragonfly doji, inverted hammer, dragonfly doji, right, followed by your 3 black crows. Okay. Coming over here to the Nasdaq, I think it's very important that people really pay attention to this. I think that you're seeing now in the market, right? A lot of people are doing good as usual, and a lot of people are doing really bad right now as usual, right? And I think that it's highlighting, right? A lot of us have been putting in a lot of work, learning and studying, and I think that is what this looks like, right? These charts are a reflection of putting in work, right? This took me about two and a half hours to prepare, right? I'm like cooked, I'm tired, it's 9:45 p.m. I've been streaming for 8 hours, right? But you have to find a way to study, right? You don't want to study during the test with real money, right? Not financial advice, right? You want to study before the test, right? Like an athlete. Athletes do what? They prep before the games. They're getting enough adequate sleep, which I don't, right? They're meal prepping. They're doing physical therapy. They're studying game film, right? What is studying game film? Going back over the chart, no different from how I'm doing, right? Everybody has free tools here. TradingView is free to use or has like a $10 subscription per month, right? So we do have a choice and we do have a chance. And I think also from the online perspective, we see a lot of people basically that are seeing the circular financing from NVIDIA, but they really don't understand what that means. Only a fraction of that money is actually being usable, right? And so that's, to me, not growth. And I think that's why you see a lot of stocks going down, and traders are taking the elevator down with their portfolios here on a daily basis here. Again, from today, the top of the day to the bottom, right? We're at a 3.1% drop here, and obviously back over after hours, right? I think we're back up like 1.57% here. Okay. Levels to consider for tomorrow here. I always tell people mark off your opening price here. I'll show you why. So mark off your opening. Where did you drop here? So this is where we opened up on Wednesday. Where was our high here that we rejected from? Right. Where was our midday price here? Right here. Again, where did we close at? Right here. And right here, right, you came right back to your mid price here. So when we're looking at lines, right, these weren't even Fibonacci's, right? These were just kind of marking up different levels within here and kind of where price was reacting to. I lost my train of thought. Let me go here to Nibius to show you what I was talking about here. So why it's important to mark your opening, your previous day high, midday price, previous day low close, etc., right? Or, oh, that's what I was going to say. So when you're looking at the chart here, right, people are wondering, like, what are good areas to get involved with? And the number one mistake traders make here, right, is I consider, right, this a war zone here, right? I get you can draw lines. Maybe there's some stuff here, maybe there's not here, right? The way I'm drawing my lines here, I kind of see where price is most likely to have a big move here, right? When you're trying to figure out, right, what is a good area to get involved with, you can kind of see right here what happens here. Price literally goes up or it goes down here, right? Price goes up or it goes down, up or down, up or down, up or down, up or down, right? Now we're back here. See how that works? Up or down and so forth. I think you get the picture here. I'll circle back to that here in a second. But losing this opening here, price here, going back over to Nibius, why it's important to mark those levels, because sometimes people get trapped, right? So again, we have net sellers here on the chart. I had marked my opening price over here the other day at open, and what did we do? We never came back to it. So sometimes, right, when people are looking at charts, right, if we're looking at stock chart, right, let's say this is the chart, right, and here's opening price or whatever. Sometimes, right, here's opening price. You never come back to it, right, but people are on calls here, right? So it's very important to mark off your levels before the market. You can mark your pre-market high, your pre-market low. It's very easy to do. It just takes a second look at the chart, and your previous day highs, previous day lows, midday prices, etc., right? But why is it important to do that? Because traders will get stuck here, right? On a day where, let's say, we opened up right here, and never once did it come back close, or maybe had a head and shoulders, or etc., like a bear flag right here. Again, control bars. Why is it important to mark your charts? Why is it important to study? You to understand here, right? No different from here. What do we have here? Falling 3. Okay. Oh, where'd I go? Was it Nibius? Right? So falling 3 here, right? So again, time frames are relative here, but marking a simple chart from here to here to here, spending about 5 minutes after hours, right? Not during the test when it's actually happening, but setting beforehand so you can have your levels marked out and ready for the market, like this, and all these charts here that I'll go over here in a second, is very important here. Going back here to QQQ, again, we're here at 668.22 after hours here. Really a big move here, and I'll explain why here in a second. Okay, circling back to here again, this is just the purpose of marking your opening levels here, right? Again, rejections here, and again, this is a very liquid zone. These are magnets to me. I don't want to get involved in a stock over here or a ticker with a chart like this. This is a war zone, right? The market's already tilted against you, right? It's like 80-20 against you, or maybe you can say, right, 99.91% against you, right? Because that is, I think, the stat, somebody fact check me on that, of, you know, how the market is tilted against you, because 99.9% of traders, right, every day are losing, right? And we don't want to be on the losing side, right? So that's why it's very important to mark those levels here, right? I want to cherry pick like at the end of a war. I don't want to be on the front lines getting shot at, right? To me, I view this as getting shot at, right? So there aren't clean setups here, right? Here, I see that this is a really good zone here to get involved with. That's corroborated by what I've written out here. One way to see kind of how big your moves can be here, or this is a free tool here in TradingView. Go to your levels, mark your price range. How high do you go up here, okay? And how low do you go here? So we go up about, at this level, about 0.5% up, and we go down, looks like 0.31% down, right? You do it eventually, you can kind of get like an average summary. You can get a true range here as well. So you go up here, how much? 0.3. This time we went up here like maybe like 0.2, okay? Down here, 0.83. Well, I mean, the full price target extension technically was all the way down here, and then so forth from here. How big is the move up here? 1.2 down here. I think you guys get the point here, right? But this takes about a few minutes, and then you can really see, right, is this a good area to get involved with, right? So if you're looking at 0-day calls for tomorrow, right, and say we're in the middle of this zone here, right? So let's say we open up tomorrow at 672. I really hope you do. Got calls here. And, right, we open up the tomorrow's market here at 672, right? Why is this very important here? Hopefully this saves somebody from making a bad decision, right? So, right, if I know my move up here, right, can possibly be up 1.2% here, okay, and I'm getting involved right here, right, now what am I left with here at open? And that's what we've been dealing with most days. I have 0.5% up here, right? If you just go over here as well, free tool and TradingView, you do a long position here, okay, you go here, and what am I risking here? How far can it go down from here? Let's do that tool here again. You're gonna do a price range right here, right? How far can it go down from this level that I've marked here, right? Let's see here. So from this level, we can go down approximately 0.65%. Okay. So what am I really risking here? Okay. So when you look at risk to reward here, okay, the move already happened here. You're getting involved in this war zone right here, and all the way down here, you're risking this. People are wondering why they're having a tough time trading. This is exactly why. These are not good setups here, right? And the problem, right, is, right, do I scalp a lot? Absolutely, right. Do I scalp? Yes, there's a difference between scalping, but a lot of traders, right, they're trying to hold for these full price targets, right? So if you buy a contract here for like a 675 tomorrow and you didn't already have them, right? There's people that are already up like 100%, like on my contracts, like me, right? Right, I'm gonna exit here at market open because, right, shit, tomorrow I might drop down 0.5% like we've been doing, and I'm not gonna risk that, right? I'm gonna reduce my contracts. Who am I selling those contracts to? I'm selling them to you. Where am I selling them to you at? Right here, right? I might get some more involved, right? But most traders, right, they're looking for the gains I just got overnight, and that's just not going to happen. What are they risking? All the way down here. That's how that works. Going over here to the S&P 500. On the 23-hour chart here, I'm showing you some control bars, no different from how we talked about here on the Nibius here, and then right here on the 30-second chart here from the drop here today. So going back over here, when I'm saying control bar, that's what I'm talking about here. It's a bar that's literally controlling price. Going back over here to SPY, you can kind of see how, right, these bars literally do what? They control price, okay? So these are very good areas to get involved in right here, right? Very high probability zones, very liquid zones here. Oops, that's not one. So we have a control bar here, we have a control bar here, 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 okay? So those are things to be important with, right? What patterns do we have here at a glance? Right, we have basically a falling three here still, again, right? If you just, sometimes people also view candles differently. I do too. So I'm just going to draw this candle in here. I'm going to color this candle in here because really you came all the way down here. So let's color it in. Okay, so really the candle's all the way down here. It's not perfect, not pretty. Never said I was an artist, right? And so far, right, I think after hours, I think we're back up here like maybe 734, 735. We'll find it here in a second. This is all I see here, right? But the mistake traders make here is, right, they see like a gap up or they see like a thin wick here, right? The way I'm viewing this candle right here is like this. And we came all the way up here, right? And then we came all, you know, the way back down here, okay? That's a big, big, big difference here. You see how that works? right? The trader, right, who thinks that maybe this candle is just like this, right? The way I see it is, this is just a full candle to me, right? If the candle came down here, let me fill it in here, right? So you fill it in here, you come all the way down, you come up, right, rising 3 here, right? But a lot of people wouldn't have thought about that. And hopefully that makes a difference to how you see price action, right? No different from how somebody might not think this is what I'm talking about here. Well, this is exactly what it is. You have to be unique and distinguish yourself from other traders here in the market. Going over to SPY on the daily time frame, we did break your 55 EMA, and what I find interesting is, right, these charts are all the same here. I think sometimes people try to do like these big brain moves here, and like that's not what you have to do. Again, you have to be creative with how you see the market here. What do you have here? Just fill this bar in here. People see a gap. I see one full candle here, right? You come up here, you rise, then you come back down here. You see how that works? You see how that's a lot more clear? Flying 3 here, right? Are there a lot of other things here under the hood? Absolutely, right? But I like to simplify things, right? And the only index giving us hope here, collapse, right? And it blew through the 55 EMA. What do we talk about the 55 EMA? It's an institutional line. Remember, below it we have what? Net, write it down, sellers. Okay. Going over here to Brent crude oil, one thing that I think people still are not taking seriously is the oil jumps. I think whether it's headlines, whether it's people talking about it, whether people have their own opinions, etc., right? I think one thing that people still are not taking into account is oil, and I'll explain why here. So oil previously, I don't have a daily chart pulled up here, but it still has a bullish hammer candle, Marvizu candle here. One of the things that I like to tell people about, right, with oil is, and first off, nobody's talking about it. So the thing that's impacting oil the most, besides, and I'll get to it over here, is that, right, we keep having fake Iran deals, fake headlines on a daily basis, to the point where it's kind of getting really ridiculous, and obviously I think it's just the boy who cried wolf. One concerning thing here that you definitely don't want to see, that is definitely not normal, so if anybody tells you that, run away from them, because they're smoking meth or something, right? So from Tuesday, July 8th here, right, we came up about 8%. That is not normal. That affects you and me as a consumer, right? That's not good here. And then obviously I think from a daily perspective here at Wednesday, we came up another 3% here. We came up 3%. So the total, right, from day over day was approximately, probably call it 4% here, and then we moved up another 3% here, okay? So one of the things that's impacting oil right now, so we always talk in the market, right? We have the macro, okay, the fundamental, right, and the technical. A lot of people just look at the chart and they think technical, right? Or they hear like a headline, they read a 5-minute article, right? And they think that's doing a lot. It's not enough. They keep saying that, guys, so please step it up, right? So you have the macro, the fundamental, the technical, right? When you look at my charts over here, right? This is the technical, right? This is all technical, right? This is a lot of work. This is very technical, right? But we have more than technical, right? We have a macro, geopolitical, the what, right? The what and the why. The fundamental, right? The use case. What stock, what ticker are we talking about? What use case, right? Tesla, cars, Micron, chips, and so forth. Technical charts are aside, chart patterns, control bars, etc., right? So when you combine all three, you get a lot clearer picture, but a lot of people are just doing this one right here. They all go hand in hand, okay? So the macro event, right? Well, one, we have Saudis that are afraid to export oil, so basically they're taking different routes, which delays times by weeks. Who does that impact? Customers. Who are the customers? Like everybody, right? We also have record inventory levels that are very low. That's another thing to take into account. That basically, again, as long as the straits close, right, we're screwed. And also, I think another geopolitical factor here is that we have Ukraine joining the war, and they are now striking around ships in the Caspian Sea. So now it's also a war with Russia, right, and now Iran. Another thing that's happened as a result of that, right, Russia has banned export of diesel because now they are afraid of Ukraine bombing their ships, right? Well, that sea was also critical for Iran to get its drones from Russia, right? I might need to fact check myself on that, right? But, right, basically get their equipment, right, now it's blockaded by us, or I guess specifically Ukraine, but again, no different from NVIDIA, right? So NVIDIA is doing the circular thing here, so is the US, right? So the US is doing what? We're funding Israel, I for Israel, and we're funding U for Ukraine, right? So no different from NVIDIA's funding everybody else, right? Circular distribution of money, the US is doing the same thing, right, for Israel and Ukraine. And again, this is another geopolitical factor that has not been taken into account yet that can impact what? Oil. And when I say can, it is this is the one thing nobody's talking about, and I don't think anybody's taking into consideration the long-term ramifications, not only from oil being up this elevated for so long, but also the Strait being closed. Two massive geopolitical factors, right? Okay. So now we have, instead of one war, now it's two. It's the US and Ukraine versus Iran and Russia, right? But like, when I say that right, Ukraine is now expanding its operations to Iran, okay? Going over here to earnings, what happened here, basically Microsoft beat expectations here. I'll take you into what happened here. So basically, right, what happened, how do you read an earnings report first off, right? A lot of people are wondering sometimes when they grab calls or puts and they say, hey, they beat, you know, this and that, right? But the stock tanks, right? I'll tell you the things to look for and how to read an earnings report. So one, the first thing that we want to look for is revenue. Money in the door, right? Growing sales means people are still buying. So we want to see that. Margin. What's left after the bills? Sales up, margins down, equal growth was bought. So think about it like income versus expenses. So when you get paid by work, right, what do you take home? And then when you pay your bills, what's left over? Earnings per share. Profit split across every share. What one single share actually earned, right? Reported versus adjusted. Two versions of profit, right? Check which one the estimate was built against, okay? And then the guidance, the company's own words, right? Conference calls and so forth, right? So the guidance, the company's own forecasts, right? This definitely moves the stock more than, you know, the other quarters did, right? So guidance, right? So like, let's say Microsoft is saying, we expect demand to be through the roof next year, right? That's really strong guidance with the beat of what revenue. They have really good margins. Their EPS, earnings per share, is EPS. Their EPS is through the roof, et cetera, right? And then, right, reported versus adjusted, right? Now their guidance is good, okay? And then obviously the bar, nothing counts against what's already priced in, and that's the whole game, right? I'll get to these charts here in a minute, but I'm just going to show you a sneak peek of what I'm talking about here. So when I talk about that bar, right, nothing counts against what was already priced in. Well, sometimes they're priced to perfection. What does that look like here? All these stocks here. So notice again how all these stocks have the same chart. Same chart. There's about 15 other stocks I can show you. It's the same chart here, okay? Same chart, right? Okay. Same chart, same chart, same chart. And again, this takes about maybe like 5 to 15 minutes just to go through some things. And again, the number one mistake traders make is they're not willing to put in enough time, right? And what I'm trying to give everybody, you know, when I'm talking in stream, when I'm making these videos here at the expense of my own time, is a chance to kind of have a glimpse into how Wall Street thinks, how market makers are thinking, what Wall Street's doing, right, to give you an edge in an already tilted and rigged market. So we'll go back here to the chart over here. So, right, we have that. The secondary thing here was, right, for Microsoft specifically, crap, I'm missing a slide, I'm not going to go back through it, was the CapEx question. So they raised spending again, and the stock went up about 7%. I think it's up 8% here in after hours. Let's just fact check that. So really, really massive move here. So we were up about, actually, went up about 10% total, and right now we're up about like 9% or so. And so really, right, so right now they're raising CapEx. What is CapEx? It's capital expenditure. It's what they're spending, right? So they raised spending again, and the stock went up 7%, and here's why that's allowed. What they're spending on for the remainder of the year, 190 billion here. This quarter alone, they spent 40 billion. Next year, they raised it again, and they reported for the 2027 range, right, about 255 billion, up from 190 billion here this year to approximately 260 billion. And what backs the spend? Signs not delivered. You have the 0 full year for revenue at $100 billion. AI revenue run rate is $37 billion. And then obviously have the co-pilot paid seats for 30 million. So what does this all mean? Last quarter, the spending ate the cash. So last quarter, right, they were spending more, right? And in a nutshell, making less, just like Google. That's why Google went down. Google is saying they're going to spend more cash, okay, but they're going to lose more cash. Well, not only are they going to spend more cash, they're losing more cash, and they don't expect to make more cash. They lowered their guidance here. So that's like a holy trinity from hell itself, for Google at least. Going back over here, basically the rule here, in my opinion, is spending is only forgiven when the revenue behind it is already signed. What does that mean? If I have $100 billion and I'm spending 50, cool. right? That looks like a growth company. I'm gonna invest in a company, right, that's making more money. That's lucrative to me as an investor, right? That's how Wall Street is thinking. Why did Google sell off, right? That's not a, I mean, is it a growth company? Yes. I'm not gonna mince words. I'm not gonna get, I don't know the expression. I'm tired. I don't give a fuck. I'm gonna go over here to the scoreboard. That's right. So here are their earnings, right? So this quarter, 90 billion in revenue, operating profit 40, EPS is reported 4.81, up 32%. This is up 80%, 80% here. So they beat their own guidance right here. Awesome. Their margins were 45%. Good. Their estimate EPS, right, earnings per share, was 4.24. They came in at 4.81. EPS strip of the OpenAI, 4.74%, up 23% year over year. I guess 27% was, so this was a one-off. I guess it was up higher. Gonna have to fact check it later on. The reserve growth rate here, one of their big things that was having issue for, I think, the past few quarters. They had that blowout quarter, the record earnings, I think it was last October, when we gapped up with Meta overnight. If you guys remember that, the contracts went really crazy here. So the reserve growth rate, which they're struggling with, right, is now up 43%, and now it's sped up year over year. The cloud segment here that they have came in at 39.31 billion in revenue, and it's up 30% year over year. And the guidance was 34 billion, or 35 rather, just rounded up. Windows, Xbox devices, etc., right, was 12.9 billion. I guess that's negative 4% year over year, and I guess Wall Street was expecting 13.2 billion, obviously, but this is a small chunk of change in their company, right? The revenue is obviously coming from other things. These are just gamers, PCs, people that are buying devices. What do they have signed but not yet delivered? About $678 billion, about 84% up year over year. And the estimate from Wall Street was at 627 billion. Their gross margins, though, were down 67% this quarter here. Year over year, it is down, and they were expecting 67.6%. But I guess the one line, right, that matters was the guidance, which is great. And Azure finally got faster, not slower, which was the issue when you saw those sell-offs about a year ago. So that is the number that changed everything. That is why Microsoft is up after hours. Looking here at Microsoft, some key levels that I would like to look for going tomorrow. Obviously, you have a head and shoulders. So you have a head and shoulders. You have a left over here, possible head. This could be your right shoulder here. Maybe come up here and reject. Maybe it's a trap, liquidity trap, like what? These charts over here that I showed you earlier, right? Maybe they just gap you up, just a double top again or triple top here, okay? Going back over here to Microsoft, you have your inverse head and shoulders. Key levels that we need to hold above, in my opinion, tomorrow is 424.26. Well, currently in after hours, we're at 421.89 here, right? We do have a possible retracement here to this level here at 404.41, believe it or not. That's why for me it's very critical here to hold this level. We have obviously also a massive inverse head and shoulders. Again, you have to be creative with how you see the charts. They're never perfect. You could argue triple bottom here. And again, using your levels here, where were really good liquid zones to get involved with, right? Obviously, earnings can go either way. You could have just dropped down and nuked, right? Or obviously, you could have just ripped up here. So earnings are kind of toss-ups. That's why I tell people, just wait. There's no rush, right? I've personally, in the past, lost thousands of dollars, ERs that are in the back of my mind because I was like, hey, right, you know, X, Y, and Z, it looks like a good stock going up here, right? Even when I've been right, sometimes I've been wrong, and that's because I picked the wrong contracts here. So for an example, right, if Microsoft is up here, right, it's at, let's say, close at 404 or 390 or something, you know, overnight, and I'm expecting a 7% implied move after earnings, right? Well, if the contract's too expensive for you, it's okay to sit out. So the expected earnings move for Microsoft was about 7% here, so about $30 or so. So it basically went up exactly to that level here, and obviously we're kind of rejecting here. So the problem that I've made in the past, right, and the problem that a lot of traders make right here is, right, they'll pick sometimes like lottery contracts. So instead of paying like $400 for a contract down here because they feel like it's expensive, and why is it expensive? You have IV, right, implied volatility, right? When you have earnings, when you have events like FOMC today, right, a lot of contracts get more expensive. So at a certain point today, right, we had a 77% IV. What does that look like? If you have a contract that's $1, $100, $1, and let's say the IV is, let's say it's a 400 call, right? It's $100 here. Well, the same 400 call, right, with that's 51% IV with 77% IV would be like $2.50 here, right? I don't know the actual math, but my point is, right, higher IV happens during, you know, earnings and after earnings, during volatility events, and so forth, right? So what I'm looking for into open here is holding this level here for Microsoft at 424.48. And again, we have that possible retracement down here. Maybe we knock it out today. Maybe we come back all the way down here, double bottom or have a triple bottom here, and create just a larger inverse here, okay? We do have our squeeze zones marked here. The squeeze zone here that I have marked is between 447 and 427 here. And again, you're gonna have people rushing to calls and puts tomorrow for no reason at all. Burr, again, is maybe a good, really liquid zone to get involved with right here at that level, right? So again, maybe if we're holding here into open, we're gonna do what? Go back to Nibius here. This is why it's important to watch the full video here when you're streaming, or excuse me, watching my videos, because they all tie back together, right? Remember that opening price here? Where'd you open up at? Where did you open up at? Where did you previously high? You know, etc., right? So that's why it's very important, right, to one, have your levels marked out here. Then also 1, 2, understand structure. 3, right, the earnings, and then 4, right, the implied move here, because that's the difference of you picking contract for 500 for some reason, and the contract goes up like maybe cost you like 200 bucks, maybe it goes up to 400, right? Well, the guy who and most of the time I've done in the past too, right? People will buy like 5 contracts for $1,000 up here. Okay, so these went up maybe like, and they cost you about $1,000. So you have 5, they're 200 bucks, it costs you $1,000. The mistake traders will make here is, right, they're expecting some insane move to come all the way back up here, right? That's crazy, right? So the guy who would have just spent $1,000 down here, he got 2 contracts here. This went up like 1,000% essentially. So they went from 400 bucks or whatever, 500 bucks to 2,000. This guy only got like maybe $1,000 and he spent the same thing, right? So it's actually, right, 4,000, right? So it's about 1.6K, or excuse me, 2K in profits per contract. That's why it's very important to what? Know structure and all the other things I mentioned. Moving next here, NVIDIA, again, has the same chart as what? SPY. I called it out on yesterday as well. We have the same pattern here on SPY. Again, really the same pattern here in all charts here, right? Rising 3, bearish engulfing with control bars, right? Market makers are controlling price here, okay? Going back to here to NVIDIA though, again, we have a rising 3 here. Here's my 95% zones for the weekly expected moves here. Again, the chart pattern that we have circled here is falling 3 method here. Come up here, down, right? Obviously we rejected here. We have our head and shoulders here as well, left, head, right. What might you do here? Create an inverse head and shoulders. Here's your left, here's your head, here's your right. So maybe do this. Again, time frames are relative here. My 95% zones here from NVIDIA to the upside that you need to break are 204. And then my 95% zones here to the downside are 184. Then this is your flush zone here, all the way down here to 164 here. Going over here to Amazon, kind of looking at some earnings that are coming up here. We have Apple on deck. So taking a look here at Apple and Amazon here for earnings preview here. We have a 5% implied move here. Some people are saying 7, 6 here. Again, it's all about visualization. This helps you pick the contract. So hopefully if you're watching the video, if you are going to play earnings, note that it's a gamble. We don't know what they're going to say. They could say, hey, we're lowering guidance and it tanks, then you're upset. You think the markets are, but no, you just rush into something. So don't rush. You don't have to, right? Not financial wise. So right, we have a $17 move to both sides here, to the downside and upside. So what did they do last quarter? Their revenue was 111 billion. Earnings, EPS was 2. Gross, 49%. Services, 30 billion. iPhone, 56. Mac, 8. No different from, again, these are kind of these ancillary products like Microsoft. So these might not matter as much, but really that's a lot of the revenue. So Mac, iPad, Watch, 8 billion, 6 billion, or technically 7, and then close to 8 billion just rounded up here. They all beat on here except for the iPhone sales here. The bar for tomorrow, right, versus what they just did, right? So revenue was in the past here, okay, versus same quarter last year, 94 billion, 1.57 billion. What's expected now, a growth of 108 billion here for revenue, and the EPS is expected here at 1.89%, 16% here increase, and a 20% increase here. And then what's the setup here, okay, for Apple? For me, not trading it, but the bar's low, the price is not. So estimates still sit under last quarter, but it closed at a record $348 billion. It touched $5 trillion in revenue. Options are now priced at 3.8% move either way. Again, I think 5% rather. And what actually is going to move this here, right? So Cook, last quarter here, and so basically the margin's a hotel, right? So Cook last quarter already warned of significantly higher memory costs this quarter. So, right, what might you expect with him saying that, right? Maybe they're charging more for iPhones. I personally don't buy iPhones, but maybe out there you're seeing price increases. So just let me know here in the comment section. So maybe the expenses are higher because cost is higher, right? That's right. Tim Cook already warned of significantly higher memory costs this quarter. Let me just read this here. They did about 49.3% and guided about 47.5% to 48%. So watch if they hold their top end and essentially do what they said they were going to do. So margin is the hotel. Are they spending less, which is great, and making more, which is what you want, okay? That's just one part of the equation, right? Again, what actually moves it? The December guide, quarter guide, I'll try and back. The December quarter guide, right, not this print, and services growth would be the tell-all. Cook's last call as the CEO, right, takes the seat on, Turnus takes a seat on September 1st. The bottom line right here is a beat is already assumed, so right, this is already priced in that they should beat here, right? So only really that matters is the forward guidance and the margin line that matters. So what does that look like? We beat on all these things here, right? It's not just enough for one, right? They can basically smash through the roof on Mac and iPhones. You're gonna be like, why is the stock dropping here? But maybe somewhere down the lines, right, maybe there's services and cloud store, right, the revenue's down here, right? So people are gonna get confused, right? Maybe Macs are up at 15 billion, and, these are increasing, but maybe the services here that are important, right, the highest revenue, et cetera, right, is lower. Maybe, right, on the phone call, right, their FCF guidance, which FCF means free cash flow, so maybe they guide down on their free cash flow. Maybe they guide down on maybe their sales and trajectory here. And why this is important, because we have to establish trust in these companies again, right? A lot of people are like, why are these stocks up so high? Why are they down so low here? And the problem is they see all these things on earnings calls, but then, like, right, sometimes they don't have follow through. When you don't have follow through, right, you have a lot of stocks that start to look like this. And we'll talk about this here in a second, the Kospi, which is the equivalent of the Nasdaq, the S&P 500 for the US here. Going back here to Microsoft, going back here to Apple. Where is it at here? Apple, right here. Okay, so that's what I'm looking for. Levels to the downside here if you flush. Going down here if they guide lower. We have our lower level here at 312. Obviously, if they guide higher, up here at 362. They can also finish flat here. That's possible here. So when you finish flat, really, to me, the call is meh. Earnings were meh. Or maybe the price of the stock was too high to begin with, and basically that's what they're expecting, which is why it already happened and it moved up. Going over here to Amazon, the expected earnings here. We're gonna go ahead and just let this chart up here. We have a head and shoulders left, head right, depending on how you want to look at it, and then again, no different from, guess what? These charts all look the same. Apple. So again, the bar for tomorrow here that we're going to pay attention to is the total revenue last year 167, 1.6, and their cloud services were 30.8 billion, and the 2026 CapEx expenditure was 200 billion. What's expected now? $207 billion. Price was raised. Their profit margins were 33.8%. Kind of guessing here. AWS cloud service businesses, they want to see $10 billion increase, which is 31%, 8% here that they want, and 70% here. So basically, Amazon guided 16 to 19% growth, so 17% lands right in the middle of their own range. The cloud margin and their spending number are what decides the reaction. Again, no different from how we're talking about Apple. The setup for me, in my opinion, on Amazon is the spending trap, right? So kind of an example here, right? Alpha beats everything, right? They raised their spending to $195 billion to $205 billion, and they basically fell over 6% here. That's because of their free cash flow and their guidance. Amazon said $200 billion. The street already said has its sights near $207 billion. So the size decides kind of, how Wall Street is going to react to that. Cash flow is also the bearish case here. Cash left across last year collapsed to 1.2 billion from, let me read this again. Cash last year collapsed to 1.2 billion cash again last year decreased $24 billion. Jassy says the spend turns into revenue, right, 6 to 24 months later. So maybe we see still a decrease in their free cash flow because maybe, right, we're trying to see if their investment and whatever they're doing is working out here. So again, this is all about trust. Amazon saying they're spending this money to make money, right? So when you have your earnings call, right, we either gain trust or we lose trust, right? If Amazon, right, guides lower and they don't hit their expectations that they promised us or they guided for, right? Because to me, it's like a promise, right? We always say non-financial advice, but it feels like these damn companies, right? Well, I mean, they're not giving financial advice, but at the same time, it's like you're giving us a glimpse that might change. That's not cool. So really, this is the same test as Microsoft and Meta. AWS acceleration is Amazon's version of Microsoft 678 billion signed backlog. So Microsoft is claiming no different from SMCI claim. We have all this backlog of stuff, right? We have all these things that we're going to get paid on in the future. Trust us, bro. So we're going to see if that's actually true. And again, that's one of the reasons why Microsoft is up here. Going back over here to Meta, what happened after hours? We have, again, remember, control bars, right? Remember, control bars, control, 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 right? Same chart as NVIDIA. All these charts, again, are the same. They're all tying together. Going back here to Meta, we have their control bar here, our pattern circled right here, okay? We have our falling through here, and now we're gonna see what we're gonna do. So one thing I like to do here, again, it's the control bar. You call it the mother bar, excuse me, and then right in here you have an inside bar here. All this is kind of chopping and reaction here, right? So until we can break this control bar to the upside or downside, right, that's where you start to have chop here. And that's why sometimes it makes sense, right? Go back to the QQQs overnight here. If you take a look at QQQ, what is it doing overnight? It's kind of going down here, right? So right here, right, you have your control bar, right? And we're seeing what price is doing here in real time here, right? So this bar right here is controlling price. You have your inside bar here. The only thing that matters is what happens with this price action and below here, right? So that's why I call this a war zone here. Do you want to get involved with a war, or do you want to get involved down here at a really decent pivot level here? We have possibly big expected moves here, right? Here, the move already happened here. You're risking a lot for what? Possibly undercut, retest, breakdown for a lot lower, okay? And Meta, not going to go over their earnings. They shut the bed, and really that's why they're down. They lost revenue, I believe, and they got it down lower. And if you remember on my Substack article that I wrote, make sure that you subscribe to my Substack if you're not already. That's why it's very important, right, to do what? One, read articles, put a little bit of time in, and then two, pay attention to one, what the CEOs say on the conference call, okay, or the executives, and what's happening with the price, and also taking into account what happened with the previous earnings as well, okay? Going over here to the KOSPI, the KOSPI is the equivalent of, again, the S&P 500 for the US here. So the reason why, again, the KOSPI is down, right, is because memory is there. It's 50% of their market. So there's no point even looking at any other chart here. 50% of the market is in memory. Why is their chart down? Again, notice how this chart is literally the same as what? Every other chart out here. Every chart is literally identical at this point here. Even crude, okay? Microsoft, and so forth. Going back over to the KOSPI, again, that's South Korea's market here. We can see our divergence. What is divergence? Divergence looks like when you have a high on RSI right here. So we have a higher high here on RSI. Okay, it starts to get divergent, right? Because you're going up here, but you're not creating a higher high here. So on RSI, when you're creating higher highs, right, you want to have basically steady pattern, right, that doesn't, collapse while price is still going up. So when price goes up here and we're creating lower highs on RSI here, that is a divergence. People don't think divergences work, but they do. You have to pay attention. You have to read the structure. You have to, and again, time frames are relative. What's happening with earnings? What's happening with, again, the three pillars, the macro, the fundamental, the technical, right? They all loop in and they all tie together, okay? So we have a divergence here, and again, divergence is having a higher RSI here, okay? So, right, price is moving up here, but then you have a lower RSI where price is too moving up. It's not moving with price here. That is a divergence here, okay? Lower high while making a higher high here. Lower high while making a higher high up here, okay? And then what happens here, right? You have a collapse here. So a really good zone to get involved with here, again, not financial advice, is, right, again, do I want to get involved with the war zone here, right? Well, first off, I don't want to get involved with this. Why? Because what is memory doing here? It's collapsing. How do I know? Glad you asked. So look at all these charts here. It's the same chart right here, and all you're seeing is a rotation here. So people are rotating out of memory, right? They're rotating out of memory. And where do you see the rotation coming into, right? Micron, rotating out of memory. AMD, rotating. And again, these are all kind of different ancillary things. And so let me show you a slide right here real quick. So right here, right, we have a memory complex, right? We have Pure Plays, Micron, SanDisk, Western Digital, Seagate, DRAM, the Round Hill Memory ETF, right? What is the equipment, right? These are the companies that have the equipment, right? LCRX, Lam Research, Applied Materials, KLAC, ASML, and I'm not going to read all these names, right? What are the IP controls, modules? You have these companies here. Marvel is a known name by a lot of people. Candidly, haven't heard of some of these other names. What is that? Penguin Solutions? Seriously? Right, then we have international markets, Samsung, SK Hynix, SK Square. SK Hynix actually recently came to the US to be able to trade. And then right, from the other markets perspective, we have this over here. And then right, we have other sides of the trade, Dell, HPE, SMCI, Intapp, PSTG, HPQ, right, HP Inc., right, HP laptops, and then Logitech, right, Logi. And right, basically the problem, right, is memory cost equals the margin headwind. When DRAM contract prices rip, these compress. So really the companies that I like to get involved with are Micron, SanDisk, Western Digital, Seagate, Marvel, Lamron, AMAT, KLAC, SMCI, PSTG, and Rembus, right? I actually don't trade these two, so I guess I should take that out here, right? Everything else gets wide and thin fast, right? So again, sometimes people are right, okay, but then the problem is, right, they're picking an ETF here, right? So they're picking, instead of just playing, I guess, like Tesla, right? They'll play like these small kind of ancillary things like, you know, TSLL. So when we talk about like liquidity here, right? There's not a lot of liquidity here, right? If you try to do options, you'll notice you have to buy like 1,000 options of a contract for like 20 bucks for it to just go up $5 here, right? I made that mistake in the past before, right? Just trade the regular ticker here, right? One that's liquid. You have 50,000 volume here, you have like 5,000 volume here, right? So if I try to sell a contract, who am I going to sell it to, right? How many buyers are there? Not many. How many buyers are here? Very many. I can exit on a dime, right? That's what that means. So again, we have all the same charts kind of over here, Western Digital, AMD, Micron, SanDisk, and so forth. And again, what's moved the market here? Memory. That's why the Nasdaq is down. It's comprised of memory, no different from how the Kospi is comprised of memory, okay? Going over here to AMD, going over here to ARM stock, we dropped down further. And again, a lot of people don't understand here, right? A lot of people are trying to buy the top. They're thinking this is a great time to buy. But I keep telling people, read the same chart every time, right? I'll show you here on stream in a second. Excuse me, on the YouTube video, I'm not gonna do that here. You've dropped down 50% from all-time highs. And the number one mistake traders do here, right, is they try to buy the dip here. Okay, try to buy the dip here. And then they end up buying the dip here. What do I mean by that? So let me go over here and show you a chart here. Let me go back to Nike, okay? So Nike, right, go to a weekly time frame. A lot of people, right, they make the mistake of doing this, right? They try to buy the dip here on a downtrend, here, 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 and now they're like cooked. And then they sell everything, right? And then the stock goes up, of course, right? Happens all the time. So you get chopped down here because you're buying the dip, you're buying the dip, you're buying the dip. You're not combining the macro, the fundamental, the technical, right? Nobody wants leggings for $1,000 from Nike, I'm sorry. Okay? Another chart that kind of gives you a good example is Adobe. You try to buy the dip up here, 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 here. Maybe they get lucky up here, right? It's dropping again. It's different this time. No, it's not. They buy the dip, and then obviously they're all the way down here, completely cooked. Okay? So I warn people, right? That's why it's important, right, to read charts, know the macro, the fundamental, the technical. That way you don't end up looking and holding charts like this. There's people actively here holding positions down millions of dollars individually, and obviously like trillions probably combined. Okay? Going back here to ARM stock, so what happened here? Let's go over the earnings to why it dropped, even though I guess they beat. So, scoreboard for them was, the revenue was 1.89 billion. So actually, they increased, I guess, 22% here. But it is I'm confused here, last quarter, negative 13% from, so I guess they lost quarter over quarter, but a year increase overall, so that's good, 22%, but they did miss here from last quarter, so that's concerning. If all these companies are so bullish, right, how are they losing money when they have all these contracts here? So let me go back here to Microsoft. This is where it all ties in, and that's why it's very important to listen to the full videos here, right, Microsoft has a backlog of, I guess, $678 billion of orders here, right? So they have a backlog here, signed, not paid, okay? So the problem here with these companies is, right, well, you have all this quote-unquote backlog and all this and that, et cetera, right? and you're losing money. Why is that? Because you haven't gone to check it, right? If you've gone to check it, right, haven't been able to cash it. So that's the problem with a lot of these stocks. They're priced to perfection, right? The minute you have like a boo-boo, the stock drops. Another issue that they had here was the adjusted EPS. It came in this quarter at 0.45 cents. It's again overall up year over year, but again it's down 25% from the last quarter. The royalties on chips were $715 million. It's up 20%. Again, that's a Q1 record. And then their licensing upfront fees are expenses, $574 million, and it's up 23%. The cash that they have left over is only $665 million. That's half the revenue. So you're wondering why the stock is dropping here? You just ripped up, right? Let's do the move here. You ripped up from basically April. Let's just do the low. You ripped up from March to the highs up here. You ripped up 300%. Can you believe that, guys? $300. Okay. And what happened? You only are making half of your revenue. I don't know about you, but if a company grows up $400, I need them to be like walking on water and turning water into wine. Okay. So that's issue one. Issue two, right? Was basically again the ARM's March quarter is always their biggest. So basically the licensing fees lands in chunks, and again it's down 30% from its normal, but it is up 20% on the year, and so that is the number that counts. So don't misread the sequential drop. There's a reason for that. Okay, where does the money come from? Royalties. So ARM doesn't manufacture anything, which is weird. You think they do. A lot of people think ARM is like manufacturing stuff. They don't. So they don't manufacture anything. They have really two revenue lines, and they're very different behaviors. They have royalties, okay? They get a small fee on every single chip anybody builds using ARM design. So it sounds like ARM is just like what? NVIDIA. Kind of weird. And then 1, 2, you have licensing, right? So they have $574 million, right? It's up 23%. So basically any upfront fee to get access to the blueprints, right? Lumpy, right? Comes in lumpy, right? So basically the quarters swing very hard because it comes in chunks. We don't know what that number is really going to be. And then obviously they have the data center side, the scam. So the data center side is compounding. Their servers designs have shipped now past $1.5 billion in cores, right? And their most recent $500 million of those took only 9 months. So basically their model is they rent the blueprint, okay? So $665 million of that $1.29 billion came out as cash. I don't know. I'm spending basically 50% of what I'm making. That just doesn't seem like a good margin, right? So when you think about buying a home, like a mortgage, right? To get approved for a mortgage, you have to like have a specific DTI. I think it has to be under 20% here, right? So when a lot of companies are struggling looking for loans here, right? If you're a bank, right? So I'm a consumer trying to mortgage a house here. I make 100K combined. I'm gonna buy like a 250K house here, right? So my expenses can't exceed a certain threshold here. Another reason why these companies may be having an issue right here is because, right, your DTI is 50% here. If you've been a homeowner before, right, you're not going to get approved, right, for a home if you're doing what? Spending half of what you're making. Because what might happen? What happens if you lose your job? What happens if you lose your demand? What does that look like? What happens if you lose your demand, right? I'm not saying they lost your demand, but what happens if you do, right? Right? You're out of a job. What happens if you're out of a job? You lose your home, you lose your cars, you lose etc. Right? So that's also why a lot of these companies are having a hard time kind of funding, getting funds raised for themselves. Okay? So their DTI is high, okay? And they're priced to perfection, and basically Wall Street didn't like that. That's it. On paper, obviously it was clean. They beat on sales. They beat EPS by, I guess, 5 cents. But again, quarter over quarter, it is down about 26% or 25% here. And essentially, the price was the problem, right? The price is near 119 times price to earnings ratio, right? So next year's profit after running 138% up on the year, right? It doesn't really make sense. They're already down about 28% on the month before this even reported here, right? So people were like, I don't want to be involved with this, right? I don't think this is a growth stock, etc., right? Basically, the price was the price was the problem. Okay, and then why can't they guide away? Half of the AI chip orders can't be filled. You have wafers, memory, packaging. The phone side is still soft, and the FTC is probing how they license. FTC investigation. So the lesson here is down 8% in the session, another 3% after the beat. They're priced to perfection, right? This was a clear sell, okay? We already talked about Apple. We talked about Amazon. Talking about the 30-year rates, another thing that people aren't paying attention to. So why do the 30 rates here, 20 and 30 years matter? There's obviously multiple other kind of bonds here, but basically, like, what are yields and why do they matter here? So basically, everybody watches the Fed, kind of in layman's terms, but the Fed only sets overnight rates. The 30-year is what gets set at auction by whoever's willing to lend the government money for 3 decades. So basically, think about it like this. Today, the Fed said hold the 30-year, and it went up anyways, right, to 5.2%, the highest since 2007. That's lenders saying they don't believe inflation's under control, and they want to get paid more to take risk. So right now, it's costing people more money, right, to do what? Raise money and also make money. So in order to get a loan, in order to do these other things, raise money, right, banks want more money because they say, hey, your stocks are doing this and that, and et cetera, right? We don't think we have these things under control to justify getting involved with your stock here, right? Or giving you guys like a loan, et cetera, right? And so, right, they want to get paid more to take on this risk. I would too. And that number is what your mortgage rate is priced off of, right? And what every stock has to beat to be worth owning. So when the Fed cuts and your mortgage doesn't move, that's why. 30-year mortgage rates over here actually track the 10-year treasuries, not the 30-year, because the average mortgage gets refinanced or paid off in about 7 to 10 years, not held for 30 years. So the mortgage rate is basically the 10-year plus roughly 1.5 to 3 points. Using the 10-year when you make the mortgage argument to your audience, whatever. I guess it's a line from my AI or whatever. I'm not gonna read that. So kind of overall, like, what do I think about the market? What are my thoughts here? When you start to see charts that look like this, I start to get really concerned. Kospi, I mean, for me, I think this is kind of unacceptable as an investor here. I think that when I start to see charts that just have the same pattern, dropping, you have SanDisk, you have Nvidia, you have Microsoft here, you have Adobe. I thought Adobe was a sell. Now all of a sudden Adobe's bullish here, right? When you start to see the same patterns here, right, a lot of people, right, they're clueless. And again, what we try to do here in the channel is we try to give people an opportunity, right, to understand how to read price action, maybe what's the market doing, and so forth, right? So people get stuck in this cycle here where they get caught in these stocks here. If I pull up all these stocks here on the weekly time frame, I want to show you how ridiculous some of these stocks look here. You have, I mean, if I don't know about you as an investor, right, but if you start to, and again, I'm gonna go through all these stocks here. Watch this. Look at these charts. Okay. Crazy. Legitimate companies, 2 of them, some of them, right? Okay. When you start to see things like this, every single stock, right? Look at this, right? I start to get concerned here, right? Why? That's not normal. Do you want to get involved with a stock that's doing this and this? Do you think Wall Street wants to get involved with a stock long term that's doing this and this? Probably not, right? So that's one thing that I like to pay attention to. That's like one of my thoughts on the market. So every day people sometimes ask like, why don't I do swings and so forth? I don't want to take a risk on a company overnight that might move here. And here's a pro trading tip. When you have your market, get your watch list, do the percentage change here. I don't want to get involved with a stock that might drop 17% overnight. That's just what I don't want to do. 16% overnight, right? And I also don't want to invest in a stock that might just move up randomly for no reason, 6% overnight, right? 5% overnight, right? And it's not just overnight, right? When you look at the weekly time frames here, right? So go to the like, let's go to like the 30-minute here, or let's go to the daily, the 10 days here. So basically from March 17th to here, what do we do here? We went up 53% here. Well, this was so bearish. You have the same exact chart as, guess what? So what part of a workday, what sector is this in? Software. So you have software. So you have a lot of software stocks. This looks like the same chart as what? Let's pull it up here and fact check. Adobe, already know it. Okay, same chart as what? Microsoft. Okay, so you have the same charts here. Look at that. So you go here to Adobe. So when you start to have stocks that start to look like this, right, it starts to become a problem for a lot of people, including myself, right? This isn't normal. I don't want to invest in a stock that's moving down year over year 60%, and congratulations. I guess now I'm up what? 50% here? Doesn't really make sense at all. In fact, I don't think that's right. It's got to be wrong. Hold on. So, I don't know why it says that. It's weird. So, right, I don't want to get invested in a stock, right, that's down 176 bucks from its all-time high. But that's all you're seeing here. To me, that's not the risky appetite I want, and that's why I'm not swinging here. So I like to take the market day by day. You almost have to. Why? Because these are the charts that matter, right? Did we forget about Brent crude? So when you start to look and combine everything together, you start to understand why the market's moving the way it is. And 1 second, Trump might tweet that war ends, and actually it might end, right? Next second, right, Iran might strike, neighboring countries that kind of jeopardize what we're doing here, ordering the Strait of Hormuz. What if we run out of oil? What if we run out of X, Y, and Z? What if all of a sudden, right? And one thing that I like to tell people where you try to connect all the dots here is NVIDIA was talking about how it's going to be bullish in the market. It's going to be bullish because we might get like an export open or something. We can sell chips to China. First off, I thought we didn't want to sell chips to China. And then secondary to that, right, what's the problem with that thesis? So how we have a backlog of all these chips here, but now we're going to open up an export or something, we're going to export more chips? How does that make sense? Right? But you know how the market's going to read it? Extremely bullish, you're going to go up here. And that's where I tell people you have to adapt. They know what they're doing. It's like Trump saying, hey, we have a deal with Iran, right? Hey, we can sell our chips to China. Everyone's going to be like, dude, you had no chips. What happened, right? It doesn't matter. You have to adjust and adapt with the market. And that's, again, sometimes, not always, how the street thinks. Currently, I'm bullish heading into tomorrow. Maybe we get like a technical bounce here. Maybe we don't here. Again, we have to watch the chart overnight here. Let's take a look to see what futures is doing currently right now. Futures is currently up overnight in the session here. We're going to do the chart here in drawings. So it looks kind of bullish here. Maybe we come back up here to the 55 EMA here on the 1 minute here. Maybe we come back up to that previous day high, previous day midday high that we marked out earlier on QQQ. Maybe we don't, but there's really no point in me kind of talking about like what might happen tomorrow. I have my levels marked out for you guys here on the chart. If you're not in the Discord, I would encourage you to just take a look at my videos, see if you like the content here. I have my levels marked out here for tomorrow. What I'm looking for is a gap back up here to 671 here. That's your big pivot zone here. And obviously we have a break right here to the downside. So my big zones here tomorrow that we need to recapture if we're gonna have any retracement upside is this bull zone here, right? 50-50 zone here. Who's in control here? And we have to go from there. The mistake people too make sometimes is they're like, well, the guy said 50-50, right? Et cetera, right? Well, what can you do here, right? So you have a control bar here. You might come up here in price, right? Come up here. People forget you can actually rise all the way up here and even break it, right? That's where you get like your different squeeze zones that they like to mark out for people. But the problem is people might get involved here and then you come back down here, right? And that's where I tell people you have to understand the channels. This is a bearish channel. You have to understand what's happening with structure in real time. What's the macro? Is oil increasing? Is it decreasing, right? What's Brent crude doing, right? What's Microsoft doing, right? Is it selling off, right? That's where you combine the macro, the fundamental, and the technical here, right? So for my levels for tomorrow here, right? I thinking that I want to see QQQ break or at least retest before market open 671.83 here. If we can't get to 671.83, we might have what chop inside this war zone here, and maybe I'm not going to get involved and get involved in any place tomorrow, right? Because what did we talk about, right? When we chop, right, we lose a lot of money here. So we have this at the moment here. We don't know what's going to do. We have to watch price and we have to watch price before market, pre-market, okay? See what's going to do. You want to mark your levels up top here, the bottom here. But again, my levels personally for tomorrow, I want to come back up to that 671 level here. And again, that flush zone will really be right here. Where are high probability zones again? They're marked on the chart right here for you to screenshot or do whatever. You have your midday, your high, your opening price up here. You have your previous day low and your close as well, okay? What might you do? Come back all the way down here, okay? You might create a larger inverse head and shoulders. Maybe you don't. Again, we have to adjust the price in real time. So you can have bullish patterns inside of bearish patterns, inside of bullish patterns, inside of bearish patterns, right? Your time frame is what matters. How you treat the market is matters. What you put in matters, right? You put in, what you get is what you put in, okay? Going over here to member gains for the day. We called out QQQ calls that printed really nice. A lot of our members did really well. Let me go ahead and start by your member gains here, highlighting what happened today in the feed. Fuck. Fucking tired. Jesus fucking Christ. Fucking Jesus Christ. So we had somebody take profits here on a, looks like select flex funded account. Looks like they passed their account, giving me some praise. I appreciate it. Thank you for trusting the Discord. We had Roshan, made him under 50. Joel made 162. This guy made a lot of money here. This is what he made. This is what he made. This is what he made. Again, I tell people, there's always a chance to make money in the market. Just because you miss a call out, to me, you missed everything right here. Good morning. I missed the opening call. I missed Hall's call out, but it doesn't mean I missed the market. Let's go. He made 20 bucks here. I think he made a lot more throughout the day here, so that's awesome. Punch Beach, almost close to passing his eval. This is what he made today. Awesome, good for you. J Bob made this. Where you at, bud? Miggies, where you at, dude? Where the hell are you at? Okay. Then we have Void. This is what he made today here in the member gain section. 78 bucks here. There's more to come. J Bob again scalping $1,147. Looks like Sweets passed his funded account right here. Good for you, dude. Killer Krill looks like he made some money here on some calls. Looks like Slater made some money on some calls as well. 1 to 9, 730, 206 here, so 900 bucks. Looks like Void came back in from the grave, made 186 there. Brass Knuckles made some more money here. And this is what his day looked like here. 3 days trading with me. 3 days streak with me since starting his paid subscription here. His longest hold time was 3 minutes. That's what I tell people. You have to adjust in and out of the market. Stop holding for these ridiculous moves. Stop expecting the stock to go up here. You have to take what the market gives you. If it gives me 50 bucks, I got to take it. If it gives me 20, I got to take it, right? Have your stop set, right? You have to be disciplined, okay? Don Steven made some more money here. Good for you. Looks like he only joined this week. He signed up for signals here. Hopefully he trusts the signals here and wants to stay for long term. Punch Beach came back from the grave, made even more money on a call out here for me today. So it looks like he made $2,000. He passed the funded account here. This is what he made today. Cool. Good for you. He made this, more money. He had a runner. This guy's paper trading. I tell people to paper trade. I respect him as a member. That's why I have him here. He's free. He puts in the fucking work. I respect people who work hard. Okay. Brass Knuckles came back again. He made more money, as expected. Chris made more money, as expected. I obviously always make money. Trader D have to work on holding on. Gains are gains. Good job. He locked in profits. All I care about. Look at that right there. Following me. 10 for 10, 100% win rate. Can't fake it. This guy made more money. He made more money. It's a fucking payout feed. It's every fucking day. We had another member here as well that said they were going to pay for somebody's possible signals here or whatever. Following me here, he has an account now with a payout balance of $117,000. What does that mean? In 4 trading days, he made $17,000 on his funded account. Good for you. Cool. Callouts for today were... Callouts today were... here. I got irritated because nobody was like paying attention on stream, so I just went private for my paid members because that's what it should do anyways. So we made money on SPY calls initially in the morning right off rip here. Okay, and then I went to stream for my private students, and then I said, what did you miss on stream? We were looking at FOMC kind of earnings and calls and stuff like that, whatever. So I'm running out of steam, so my brain, I can barely think. So watch the video. Make sure that you watch everything else. I'll show you one more thing here. A lot of making the wrong mistakes every day. This is a payout feed every day. There's too many screenshots to go through, right? This is today, okay? This was yesterday, $37,000, okay? All the screenshots, all posted in Discord, all live, all streamed, all shown, okay? That's yesterday, okay? What did I do? $32,000 payout. Cool, okay? The day before that, right? This is what winning looks like. 100 plus screenshots on the week. Discord made 125K. You can go ahead here and fact check it yourself in the Discord, blah, blah, gains. Again, I can go through literally like 3-point walk off here, $24,000 in a day for the Discord here, funded accounts, QQQs, call it bottom tick shit, 1000% plays here every day. I'd encourage you just to go back, fact check it yourself, ask somebody, I don't know, hop on stream, prove me wrong, right? Like, hey, this guy's full of shit here, right? Another thing I want to show people here too, a lot of people struggle with futures. I don't know, come here to futures here, take a look at what I've done here. If you're interested in a free day 7-day trial, do it. This is what I've done for futures. So all verified. You can scan the QR code, fact check it for yourself. I'll leave it here for a second. Account pass, account pass, account pass, account pass, account pass, account pass, account pass. 1. So let's count it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we have 11 total. Okay. So basically in 12 weeks, 14 weeks, that's 1 pass per week on stream. And I actually have a lot more, just not posted here. This is just from one prop firm, right? All verifiable. Go ahead and fucking Google it yourself. I don't give a fuck anymore. Okay, so go ahead and look at that up, whatever, blah, blah, blah. So again, you have to make a decision as a trader, right? Let's take a look at this here. Make a decision as a trader, right? Are you going to attend just a free stream, or are you going to try to figure out yourself? What does figuring out yourself look like? Usually not good, right? SMCI, call of the year. Look at what happened here. Called it here. Posted it here. May 19th, grab this chart. What happened? Posted, timestamp. I cannot literally edit this chart at all, right? What happened when I called it out here? That was like a 5,000% play here. I said 5,000. Maybe it was like 4,000, whatever. This is what learning structure, putting it all together, putting the work in together looks like, okay? When you learn structure, when you're willing to put in a bit more time here, you can start to do this with me. That's what I care about. That's what I'm passionate about, right? Uh-oh. Okay, you're able to call out 68% moves. People will say you're lucky, right? But they won't see everything that you're doing. They won't see the videos that you're making. They don't understand that you have to physically mark these charts out to talk about them, okay? So a lot of people, right, they think it's luck, they're jealous, and that's okay. But like, if they just took 5 minutes of their time to start to learn simple things that are free on the internet, or learn from someone who knows what they're doing, not financial advice, right? You start to put things together, and you start to see the market a different way. You start to change your life. You start to reach your goals. And I've worked with so many people over time, and you know, the number one thing that I tell people, right, is they just don't listen. It sucks so much because there's people that should have like bare bones minimum $1,000 in their account. There's people I know that should have $500,000 in the account, right? I've given out so many calls, so many things, to the point where sometimes I get so burned out even thinking about it, right? So you have to make a decision for yourself, right? I can tell when people sell the positions that I tell them to get. I can tell they don't, it's not about respecting, right? Because I don't think anyone intentionally tries to disrespect me, right? But when you're not able to hold a position for what someone, right, who's making 2-hour videos, who is posting all these screenshots, all these account passes every single day, right? Everything's verified, right? When you start to do those things, look at all these screenshots. This is from one fucking day. Like, come on, man. When you start to, you know, really pay attention, right, you can actually make money. There's been plays where I've given people, right, like, you know, that, like, they're $100,000, man. And it just sucks because it's like, sometimes they get upset. They don't hear what you're saying. They get defensive. They always have an excuse. It's like, what I've noticed with traders is there's always excuses to why somebody did something, and they have to own it, right? So, right, you know, there's so many things they gave out. We had SanDisk puts, we had SanDisk, we had SNDQ shorts here. I gave out that to about 4 people. I'm the only one that took them. Okay, not financial advice, not. Okay, I gave out SMCI stuff, right? That chart that I just posted here, right? And, you know, again, the tough and crappy part for me is, right, you try to give everybody the tools. I get it. You can't lead a horse and make it drink water, but damn, it just sucks seeing people, right, in real time, because I really want to see people win, right? I'm here making this video for free. I don't get paid for it. I barely get paid at all, right? It sucks when you give somebody something, you put in so much time, you think they're learning, they say they're learning, you tell them to grab something, and then, like, almost like, you know, behind your back, or, you know, because, you know, it's about trust, right? If you're going to be in someone's Discord, if you're going to listen to somebody, it's about trust. So the way I see it, right, when people can't follow directions or listen, right, I feel like, I guess you don't trust me, man, you know? And that's fine, right? But then you have to make a conscious decision. If it's not me, find someone else. If it's yourself too, awesome. That's what we should be doing anyways. please find your why, write down your goals, you know, and figure out what you truly want to do. Because one person's going to be up here retired, vacationing, and one person's going to be trying to do day trades, right? At a certain point, right, day trades are like, grow up, right? You want to be retired. But these people may not ever grow up, and that's the crappy part. They're going to be losing money on a chart, right, that we showed you, okay, somewhere over here. They're going to be losing money on a chart grabbing crazy ER calls with a stock going all the way down, okay? They're going to be getting invested in the Korea market, right? South Korea, right? Grabbing at all-time highs, okay? So please make a decision with like how you want to approach trading, who you want to commit to, who you want to, I guess, just listen to. Because the crappiest thing that's gonna ever happen, right, is sometimes people send me a lot of stories, and I take in a lot of negative energy sometimes. I'm in a space where, you know, a lot of people, they're down like 200 Some people are down more, 50, 100K on the year, 600K on the year for some people. And I think the thing that people kind of misread, right, is they see the cool cars, they see the fancy watches, they see all these things that I post, and I'm like, dude, I've been up since 1 o'clock in the morning. I'm about to fucking flip out, you know? And that's a conscious choice I'm making, right? So somebody might say, like, you're making a choice. And why am I making that choice? I used to be homeless in my car, right? I know what it feels like to basically have everybody give up on you, even including yourself. And I would encourage everybody to not do that. Give up on yourself, you lose everything, right? It's okay to make progress. Do it one day at a time. This is not a marathon, right? This is a marathon, right? It's not a sprint. This is a journey upwards. But everybody wants to get up here vertical, right? Everyone wants to come all the way up here, right? This is a journey, okay? You don't just go vertical on your journeys, right? Usually, the harder you go up, the bigger you are, right? The faster you come down. No different from all these indexes, right? So when you're steady, when you're not trying to get your payout immediately, right? You go to members like this guy over here, right? And you're able to rack up $17,000, okay? It's a little bit unusual, honestly, candidly, but I mean, that's just what I produce every day. So in 4 trading days, that's pretty typical for me. And again, you can corroborate that, fact check it. I don't know, don't care. But, right, you build your drawdown slow and steady, tick for tick, second for second, day after day. You don't forget your goals, you don't forget your why. A pro trading tip, right, is find your why. I'd encourage you, right? Write down your why. Maybe send it to me if you feel comfortable doing that, right? Maybe post it and share with others. Maybe start like this chain of like, what's your why? Is it your kids? Okay? Is it your family, right? Parents, siblings, right? People you don't even know on the internet, strangers paying it forward, right? Kids, family, or is it yourself, right? Maybe you had a job, maybe you had a dream car, right? If you don't know your why, how can you be motivated? Maybe on Monday it's kids, Friday it's family, tomorrow it's you. You have to make a decision. You have to commit. Commit to yourself. That's it. I'm done.